What's up, everybody? Crazy day, crazy day. This is actually the biggest crypto liquidation event in crypto history. Over $20 billion wiped out of the market. It's next to the 2020 crash and the FTX crash in terms of magnitude. So yeah, there's a lot to unpack today. We've got to talk about why this happened. Last night, I left a voice note in my Discord and Telegram. Before I went to bed, I noticed things were starting to deteriorate a little bit, but I didn't think it would get this bad. So we've got to talk about what happened, what we're doing. I've got Paradise joining me today. Obviously, he's going to be a steady head on the technical analysis side to try and give you guys the best outlook from a technical perspective. Things actually look a little bit different on the weekly and the daily than the picture that's being painted on the 1 hour, 4 hour today. So yeah, going to be a bit of a debrief, post-mortem, so to speak, and then we're going to head into what we're doing and what the charts are saying. So Paradise, how did you fare this morning?
Yeah, look, I have two phones. I've got a business phone and a personal phone, and I checked my, I never checked the business phone before after I've had breakfast, walk the dog, etc. But I had a message from Morin in the Discord this morning saying, enjoy the group today, with a laughing emoji. And I thought that's sinister sounding. So naturally, I went and grabbed the business phone, checked price. Like, yep, cool. But I mean, at the end of the day, like I've been trading since 2017. These massive flushes are nothing new, right? It's just, that was a $20 billion or $19 billion liquidation candle, which is like 10x more than the FTX one. So that was, a very savage move for anyone involved, especially if you leave it up. A lot of people got carried out on that one, but I thankfully wasn't in any leverage positions. Some spot positions I was building took a bit of a hit, but yeah, I'm fine at the moment. Just sort of zooming out.
We saw were just crazy. So my story is actually quite funny. I was basically trying this new protocol because I watched the Durov interview with Lex Friedman, and he was speaking about how from like 8 o'clock ish to like the next morning, like for a 12-hour window, he switches his main phone off and he just like reads books, journals, and uses that time for self-development. And then when he enters the day, he's like pure razor sharp, ready to focus for 12 hours. So I'm like, all right, I'll try this strategy. I had my best sleep score in weeks, so it worked. So I was feeling good. I was about to go to the gym. You're supposed to go to the gym without checking your main phone. But like part of me had like an inclination to check it because the market before I went to bed was like starting to fall off a cliff. So I'm like, all right, I'll check my main phone just to make sure prices are okay. And then I'll go to the gym and then I'll start working. When I checked my phone, I was shocked. Bitcoin was at 110 and I was like, okay, that's very weird. So I opened WhatsApp and I had messages from my team like panicking, and I was like, okay, what's going on here? Then I went onto the exchanges and I saw that Bitcoin had wicked to like 101k on some exchanges. On Bitfinex and Binance it was close to like 103. I saw AVAX went to $5-6, like just some ridiculous prices, like because there wasn't enough liquidity and everything got wicked. We saw Atom was at like 2 cents overnight. Like obviously you wouldn't have been able to get fills on a lot of these, but so many altcoins just absolutely shot through the floor. So then first thing I did was obviously jump onto Discord and piece everything together. I feel like I've got a pretty good read of what happened. So I want to explain to everyone why this actually happened, because I think that's very important to understand what was at play that caused this move. And then obviously we can get into what we're actually doing. So Paradise, if you don't mind, can I go through the reasons why this happened?
Yeah, bro. Teach me some stuff. Let's go.
So the truth, and I did a post about this, and I'll paraphrase parts of it. The truth about this crypto crash is that it was really the perfect storm. So the risk factor in the space was actually a lot higher than people thought. So typically, people will attribute two things to risk, either euphoria or funding. Now, the problem in the market was that funding was actually a bit disguised because there's lots of airdrop farmers that were basically farming delta neutral. So funding wasn't overly aggressive, which is typically a sign of over leverage. But what was getting aggressive, as you can see in front of you, was the open interest for the altcoin market. So as Zahir says here, concern around altcoin open interest has been growing for months. Wasn't a question of if, but rather what and when the trigger would be. We needed three conditions. Bitcoin needed to get rinsed and trigger alts to go lower. Exchanges and MMs needed to push limits past 5 to 10% on alts. Illiquid window, which was delivered on a Friday afternoon after the market closed. So it created this perfect storm. Basically what happened was Trump came out and he talked about China and tariffs, and that triggered stocks to go down. That triggered Bitcoin to go down. And then that triggered a massive unwinding of this perp trade. So the very weird thing about that environment and why it was the perfect storm for a big wick is because over the last month, the entire narrative of the market had shifted from people on spot to leverage. So if you think about Asta and Lighter and Edgex and Hyperliquid, like all of these airdrop farmers, not just retail, but also funds, were basically taking advantage of incentives. So people that normally would have longed Bitcoin like on spot, instead were now incentivized to long Bitcoin on a 1x or long Bitcoin on a 2x. You know, they thought their positions were relatively low risk, but that would enable them to actually earn airdrops. So people had shifted from spot positioning to leverage positioning, and you could see this trend happening over many, many months. What that created was an over-leveraged altcoin environment. So then when we had the trigger, which was the tariffs, and when we had it on a relatively illiquid Friday evening, and combined with the fact that many altcoin valuations are like overinflated as they are because the underlying liquidity is mismatched, that resulted in a record-breaking wipeout of $20 billion plus liquidated in the market. Now, I'm also hearing, and I'm not going to name any names because I'm not sure, frankly, but I'm also hearing that a couple major market makers and funds either blew up or at least were forced to puke a significant chunk of their altcoin collateral that they were using to leverage against and probably execute some of these more advanced strategies. So that also added fuel to the fire, resulting in a lot of altcoins just shooting to the floor. So it's a very weird set of circumstances. It's not your typical set of circumstances that cause this dip. Like usually there'll be some, you know, external black swan and, you know, the market will react accordingly. But this was very much like a smaller trigger in the scheme of things, but the perfect storm for a crypto liquidation event. So there's a few learnings here that I want to go through, and then we'll get onto what we're doing. Firstly, prices aren't even with risk. So people think that because prices are okay, the risk factor in the market must be okay. Like if altcoin prices were fairly low, right? So you'd think, okay, the risk isn't, you know, that high because the market isn't overheated. It's not overheated. So typically what you'd look at is funding, but because there was a lot of hedging and delta neutrality going on with the farming strategies, so people going long on one exchange, short on another exchange, it covered up the real story. And the only indicator that was showing the real story was altcoin open interest. But even so, this wasn't telling the full picture of, because not all of the data is fully transparent, especially with the DEX oracles. Like, for example, an exchange like Asta only reports their front end volume. They don't actually report the breakdowns behind the scenes. So the DEX market and the centralized exchange market didn't fully, I don't think, tell the full story here. The second learning is that market cap isn't indicative of liquidity. So many altcoins had massive wicks. They were multi-billion, like Atom was multi-billion. It wicked like literally below $1. But that can happen if they're not that liquid, especially on perps. If the order books aren't that liquid and you have one market maker pulling liquidity, they can literally go to zero. So it just shows you that things can just shoot through the floor at any time, and market cap isn't that relevant. Also, this works in the reflexive manner, right? Like altcoins can go way higher than you would have ever expected because they're not that liquid. So it kind of works in both ends. That's the reflexive nature of the altcoin market. The third learning is that you should probably stay away from leverage unless you have a good reason to use it. What I mean by this is if you're using leverage as a substitute to spot, that's not a good reason to use it. Paradise will obviously speak about his strategy shortly. Like his entire strategy is built around leverage. So he has a reason to use it. That's the entire strategy is maximizing capital efficiency. If you are hedging as well, that's a valid reason to use it. Like I had a few friends that were actually hedged short against their illiquid altcoin portfolios. So they were able to cover a little bit. That's a valid reason to use leverage. What isn't a valid reason to use leverage is, oh, I want to long Bitcoin. Oh, but I don't have enough money, so I won't make enough if it's spot. So, okay, let me just go in like 5x leverage, because then if Bitcoin pumps, I'll make a bunch of money. Because I can't afford, spot, I won't make enough. Like that's a pretty bad reason to use leverage, because you're basically gambling at that point. So stay away. I stay away from leverage unless I have a very good reason to use it. And most of the time, I don't find there is a good reason to use it unless you're a full-time trader. That's really the exception here. Rule number, and I'll get Paradise to take on that shortly. Rule number 4: always set stink bids on spot. I mean, now not all of these filled, but this is something I've been preaching for many months. I was actually able to get a couple very nice fills on, not full fills, because as I said, the market was not that liquid, but it's basically free money when you have these huge wicks to the downside. If you just have ladder orders, and you'll see this across the market, not just on Bitcoin, but on a bunch of alts, you would have actually been able to get some pretty crazy fills. I mean, look at Arweave. It wicked down to $1.50. It, obviously bounced back to $4. Even like the biggest coins in the market, like Uniswap was below $5. Doge wicked down to 8 cents. I don't know why TradingView has that thing on. MNT wicked down to $1.45. Like pretty much you go through any coin and you will see these crazy wicks. Even Link went to $7 now, and it's already back to 17. Now, you wouldn't have been able to fill here, only maybe a little bit of liquidity. So I'm not saying like this was actually $7 because it was very quick, like a matter of seconds, like bounce and then whipsaw back up. But I did personally get a few fills, a few smaller fills. So if you had spread out across multiple exchanges and had multiple limit orders, you would have gotten something. The key here, though, is not to do it on leverage, or if you're going to do it on leverage, have it on like 1x or 2x. So you wouldn't get liquidated on your stink bids. Ideally, you just have spot limit orders. And even for on-chain, you could have done it with like Telegram bots, for example. So that is, I think, one of the biggest points and takeaways here. We have spoken about it for a while, but it just reinforces the point. And then finally, and this is also a very important point, survival is your number one goal. And I think a lot of people kind of get caught up in the greed of, trying to make money and trying to chase. But I think overall, if you look at your crypto career over like multiple years, the number one thing you have to prioritize is surviving and saving money, because then just by nature of being around, you're going to put yourself in a position to have opportunities to make money. And for some people, today is that day. Like right now, it could be an opportunity to make a lot of money. And we'll talk about some of the opportunities later in this video. But unless, you endure days like this, unless you're able to set up your portfolio for survival, and I did it through holding 50% stablecoins, and I've gotten some backlash on the shows for that over the past few weeks. But ultimately, like, this is one of the reasons I did it. So I could go a bit more aggressive with a portion of my portfolio, but then really defensive with the other portion. And I've said this a lot. So I have liquidity to take advantage of opportunities when they arise. When the stars align on a trade, and I think we are starting to get that alignment now in a few setups, now I actually have the liquidity to go in and capitalize. If I was fully in altcoins, I wouldn't have that opportunity. So I think overall, whatever you need to do to set up your portfolio for survival, Raoul Pal has some good guides here. No leverage, no FOMO, top 3 to 5 assets as a main bag, self-custody, only trade with a smaller bag, have a longer time horizon, all this sort of stuff. And it looks different for every person based on their strategy. But whatever you can do to make sure you survive and make sure you stay around, that is your number one goal, because money is going to come as a byproduct. But if you prioritize making money over survival, you'll probably overexpose yourself and end up, suffering during days like this. Now, I'm not here to say I told you so and stuff, because it actually sucks like a day like this. And I've also taken hits across multiple of my spot positions. So I'm also down a substantial amount. So, my heart definitely goes out and my thoughts go out to people that did get wrecked today. I mean, I've heard crazy stories, like some of people that I know in the space losing tens of millions of dollars by being over leveraged. But I think you have to learn from these things, like you can't, if you have lost money today, what I'll say is the worst thing you can do is bury your head in the sand. Like, you really have to use this to reflect and learn, because even if you're fed up with crypto, this stuff's going to rear its head in other markets as well. These are the same principles that are relevant to any financial decision, whether it be equities, whether it be property. Like, if you can't manage your crypto is actually a great space to learn how to manage your emotions, because it's going to become much easier to trade in other areas and invest in other areas as well. So I would obviously take the day off if you need to, like, get a clear head. But then when you come back, I would actually reflect on what went wrong. And even myself, like, there's a couple things I'm reflecting on that I got a little bit wrong. And I think ultimately the way to keep getting better and keep improving and handle these situations better is to learn from them. Like, even today, I'm a lot less affected than I was like during the whole Luna thing. The Luna thing, I was so over leveraged and I got absolutely wiped. Today's wipeout is bigger dollar wise, but I'm much less affected. And that is because I've learned from things like Luna, and the way I've structured my portfolio now is now in my favor. So every single time there's an event like this, you're just improving and you're learning from it. 10% improvement, 10% improvement, 10% improvement. Then the next time there's a crash, you actually might be making net profit and not net losses. So that's my spiel. Before I get into what I'm doing and what I'm buying, because I am buying some stuff, and I've also got an altcoin list to share with you. Paradise, I want to get your take from a technical perspective, because I've spoken a lot.
Yeah, that was good. That split capital tweet's very good. He's onto it. I mean, this is nothing we haven't seen before, right? So assume, are we on my chart?
Yeah, I'll get it up. There we go.
Yeah, cool. So it's not like we didn't have breadcrumbs, like a sort of, I covered this on the last two of my shows on my YouTube channel. You guys should go follow that if you don't already.
We'll leave it in the description.
Yeah. So what we've seen in the past is these weekly SFPs, these sweeps of candles. So an SFP is basically a failed swing. Price does swing up, can't close below the former wick, and we generally get like a reversal, sort of like a reversal setup, right? So since 2023, I'm actually just calling it 2023 because of basically that's where I have the weekly noodle, which we're going to go over in a sec. But if we just get rid of the noodle for a sec, you can see all of these SFPs leading back to 2023 have like had a very bullish push up. We get the weekly SFP and then we get a substantial sell off. And I marked these out the other day with a percentage tool, how big those were. Some were 30, some were 15. But you can see all these ones in the run up. This one's a bit different because it's where Trump got into office. So that was fueled by a narrative. But, we had this one over here in July. And basically we swept that. We put in a down move of like, I can't remember how much percent it was. I think about 14%. And then we just closed the prior weekly, like the last week, we just closed it as an SFP. So like I said, it's nothing we haven't seen before. And, potentially this current week now is going to close as an SFP again. But what we've done in the past is those SFPs have come down into key levels. So if we just go to the weekly noodle, it's been a while since we've been on show together. I have discussed this before, but it's still just holding true. Since 2023, when we flipped the weekly noodle, we have never closed a body below it. We've had plenty of wicks into it. We've had a considerable chop through it, but we've never actually closed a candle body below it. So this has always been my barometer in the sand. For the uptrend is good. The cycle's good to me as long as we stay above this. Now we've front run the noodle twice over on this wick here in 16th of June, and then this one on the 1st of September. And we finally swept those. So this to me on the high time frame is like a nice setup. If you pictured this as being like a 1 hour chart and you're just trading intraday price action, you would see this as a sweep of like key lows right here into a high time frame POI. So just pretend it's the hourly chart. This would be an hourly order block into the hourly noodle. And this is like a bread and butter setup for me. But the problem is a lot of people are now on the 1 hour and 15 minute trying to get an entry on this, trying to figure out how they can play it. And they're going to get chopped to bits in this wick in here. Because there's likely we have an extended period of chop now after that, after a sell-off of that magnitude.
That was actually going to be my question. Like previously what we've seen, unless it's a V reversal, and I don't think this is because it's not really a black swan, it's more of like a market reset. Typically what we see is like the wicks getting refilled. So like, you'll see the market bounce. Like right now it comes back to mean reversion. And then like you'll see like a slow bleed over like the next days and weeks to come back down and test liquidity in that zone. That's just what I've noticed in the past from events like this. Is that something that you expect to play out this time again on Bitcoin, and then obviously as an extension of that on altcoins? I don't think alts will go down to their wick lows, by the way, because those wick lows were so manipulated. I'm just saying like chop / down for a period of time.
I believe so. I mean, a lot of people got carried out on that move. So I don't think we just see that Dalai Lama pattern, then continue up. We always get the mean reversion, which we've had, like the mechanical bounce. But you can see we came into this weekly demand level, the weekly noodle. We've had a nice bounce off that. So history is kind of repeating like every retest we've had in that in the past. And if we go to lower time frame, we can see that sort of reversion play out. So we go to something like the 15-minute. It's kind of done that Dalai Lama pattern out, but now it's just doing that consolidation. So what generally happens with these wicks, you see sometimes up to a 50% fill. I never just rely on that number for anything. But if we're to look at this candle getting filled on the wick, let's just go to the 4 hour. Line that out. Like there's potential we could drift down in here and like fill some of it over the next couple of weeks. I definitely don't think we just push up in a fresh highs from here. Even though we did take good liquidity, we swept into like a key weekly demand. So that's pretty good. This is also reflected across Ethereum. So we have that weekly demand there as well as the weekly noodle.
And ETH looks weaker for sure.
It does, definitely. And also like Solana is doing the same pattern in terms of like large caps. So, into the weekly noodle, into a weekly demand level here. So it's hard to be bearish in the high time frame. I just think people are going to do themselves a disservice of getting chopped to bits in lower time frame. And I think a lot of people like, I missed the bottom. I feel like an idiot. Like I did a stream this morning in the group and a lot of people like, I missed that bottom. I could have been up 6x by now. It's like, yeah, you had a 4-minute window, I think it was, to
and on
try to,
alts, like 4 seconds. Like
yeah.
there wasn't liquidity to fill any order like more than like a few $100 on like AVAX and stuff like this. So the numbers are like lies, you know what I mean? Like it's $8 AVAX actually wasn't really possible for you to actually get it. Even though that's what the chart says. And I was asleep. Like it was literally 4 a.m. So I woke up and saw all of this retroactively. So unless you were up trading, like on your at your desk in the US, or like you were up super late in Europe, you wouldn't have caught it.
Well, there's some other factors for that too. Is the fact that a lot of exchanges went offline during that period because like the liquidation engines get overloaded. So a lot of people in the group this morning, they couldn't sell or buy anything because they couldn't execute orders. They wouldn't go through. So like what's happening is like bots and algos are catching these bottom tick buyers, not your average Joe. So there's no need to beat yourself up about it and feel bad. Like most people didn't catch that. I don't think anyone has stink bids on Atom at 0 cents, which is what where it went on Binance. So, I would never in my life be going, I'm just going to leave stink bids on spot on an exchange at 0 cents in the hope it fills, because when you're doing that, you're open to counterparty risk. What if that exchange goes down and you've got $100,000 spot order sitting down in Atom and it just, it never fills, and then the exchange goes offline, you've lost that money. So no one really caught these things. But in terms of BTC where it is now, like I was saying, it's hard to be bearish on the weekly. It's also hard to be bearish on the daily. Like we just treat this for what it is. All this is a range, right? And we wick below the range and we close back inside it. So effectively, we've just deviated either side of the range right now. So yeah, I do think there's potential. I don't think we come and raid this. I mean, BTC, I'm open to the possibility we come and take out this low again. Maybe ETH too. I don't think we're like testing the bottom on alts like you said. I don't think we're going down to 1 cent an atom again. And if we do, if we fill in all these wicks on things that have had these massive sell-offs, I don't think you want to be in them. Pengu is a good example. This had a absolutely sensational wick down. If we come back down here and fill this, I don't think this is bullish. I don't think we go, cool, we've now rated the low, let's push up new highs. I think this is indicated by just like...
I also just don't think this is like a 1% chance of happening. It's just the move, like I explained earlier in the video, what triggered the move. Like that's almost like a black swan set of variables that triggered the violent wick to the downside. So if those wicks got filled, I just can't see it. Do you know what I mean? Like it's just not... It doesn't make sense. No. It doesn't make sense. They could bleed a bit more, but they're not going to refill the lows. And if, as you said, if they do, we have much bigger problems. Bitcoin's probably at like 80K at that point. So,
yeah, I mean, if those alts go down there and test the bottom again, I think they just don't ever recover. And I'm not saying that for every single alt. Obviously, there are outliers with strength at the moment, but like liquid things like TIA, which has just been in a downtrend forever. If it goes down and tests its low again, it's not a bullish sign. It's not a bullish SFP. But all I'm doing, I mean, I think a lot of people can do is, if you had a really hard day, I imagine a lot of people did, allow yourself time to process that. Like your mental capital is more important than anything. So you're not going to make any good decisions if you're stressed out based on logic. They're all going to be based on emotion. And any trading strategy or like execution you make based on emotion never goes well. You do it in euphoria, you do it out of panic. Like most of those things don't pan out. So I think a good advice for a lot of people is, lick your wounds, take some time, spend time with family, go to the gym, get some endorphins going. You can wait till the weekly close because we have a very simple structure right here. If we just go to line chart, effectively, this is actually the market structure low. So down here at 108K, because that was validated by us closing above this up here. So effectively this is, but I'm actually trading the one a bit lower as the market structure break. This swing down here at 98K. So for me, like I think first warning signs, if we close the weekly below this 108K level, we can actually put it to the wick. We'll stick a line chart. We close the weekly below the 108K level. I think we're in for an extended period of chop, but I'm not freaking out. I think, if we start to close below 98K on the weekly with a body, that means closing below the weekly noodle, which is held historically since 2023, means closing below this structural point. And it means, basically a weekly SFP that's now led into a market structure break to the downside with losing trend. That's where I'll effectively say, maybe the cycle has topped here. But until then, I'm just viewing this as opportunity because every time we see those SFPs in the highs, they've led to sell-offs. Conversely, every time we see the SFPs at the lows, they've led to a new leg up. If I just mark this out here, if I mark this out here, if I mark this out up here, these SFPs have been bullish. Now, what have we done here? We've swept these key lows into a high time frame demand, into the weekly trend. So I'm not saying, just throw all your money at the wall right now and say I'm max long for new highs. But at the same time, I still think this is opportunity on the weekly. So a TLDR, well, the roundabout thing I was getting to is if you're having a bad time, come back on Monday, wait for the weekly close and see if it's above either 108K or at least above 98K. And until we break those levels, you don't need to freak out. This is with BTC, like obviously with alts, if your portfolio is heavily underwater, that's just looking at altcoins, it's how they are. So if I actually go to others chart, we can see the damage done there. So this is just everything outside the top 10, as we all know, top 10 market cap. So we can see that like garish elephant had a big buy up on it, but this is not indicative of strength. To me, I've been going on in my show about a weekly close above the 326 billion level, this structural point. This is where we're going to see altcoins rip. Obviously, we're seeing the complete inverse on that. So it's not time to sort of FOMO into alts, in my opinion. I think you just play outlier strength, things like BNB, MNT, things that have had narrative to them lately. But I think lower cap stuff, mid cap stuff is just,
let's talk about that.
Yeah.
Let's talk about what to buy, because I think the strategy here is, and this is just what I'm doing, so not financial advice, but personally, I'm starting to deploy some of my capital today. So I already had some orders trigger overnight, but I've front loaded some trades. What I've front loaded into is, as you just said, focusing on the majors first. So Bitcoin, ETH, Sol. This is a list. I'm not filling all of these because I'm already happy with my exposure across a few of them, but this is the general list. BNB, MNT, Pump, Pengu, Rail, potentially World Liberty, and potentially ENA. So I'll explain this in a little more depth. I'm getting a bit of exposure to the things that I missed. BNB I was very underexposed on. I think it'll do well. So front loaded a bit of that. Also had a limit hit. MNT I have already good exposure to, but I'm adding a bit more because it has positive flows. The thing you've got to focus on with altcoins now are the altcoins with positive flows. I discussed this a few days ago, but you're looking for coins that follow this criteria here. So a spot-driven, tightly controlled supply, no unlocks or supply coming soon, no huge position held by market makers, or at least you have more token sinks and demand. So it could come from DATs, it could come from buybacks than you do unlocks. So I'm looking for things that are skewed towards the demand side. And I think the exchange tokens like BNB, MNT, they fit that bill. I think Hyperliquid and Asta also fit that bill. The only reason I'm not averaging in is because I don't know what this does to the perp dex narrative. Like, could perps be a little bit cooked for the near future? And will you see volume really dry up, which affects the valuations of these coins? That's the only reason I'm more comfortable getting into like other majors than I am into Hype and Asta right now. I think ENA also is potentially a good look. I know Athena USD depegged, but it repegged, and I think actually it's a sign that it can survive an event like this. So ENA is also on my list, and World Liberty Finance got really hit, but I think just given how the Trump family is supporting it, it's still on my list as potentially a good DCA, and I didn't have a big position, so this is giving me a chance to enter in. Rail is Vitalik's new, not new, he's been invested for a while, but it's a privacy play, and privacy was a big narrative prior to the dip. So a lot of this stuff, like they were big narratives prior to the dip, and I'm expecting the stuff that is exhibiting positive flows will actually outperform once the market starts to recover. The only caveat I want to give is, as Paradise said, like it might take a bit of time. So I'm front loading a little bit today, but my TWAPs are going to be quite slow, potentially over a few weeks, because I think the strategy now is you're not, leveraging, you're just adding to quality spot positions slowly. And, they might take some time to recover that. They might bleed out a little bit, but you're viewing this general window not as a price opportunity, but a time opportunity. So like, let's say the next 2 weeks of October, I still expect Bitcoin to hit new highs. So I'm going to slowly average into stuff that should outperform if Bitcoin hits new highs. I also think I know I've said this a lot for many months, but it's still relevant even today on a market dip. If you need to consolidate your portfolio, it's never too late to do it, in the sense that these are going to be probably a mentally tough couple of weeks. So don't hold rubbish you don't have conviction in. Like I said in a show a couple of weeks ago, do the magic overnight test, imagining, okay, if this position got magically liquidated into USDT overnight, would I rebuy that position? And if the answer is no, then you probably shouldn't be holding it. So let's say you hold like an absolute crap coin you don't believe in, but you really believe in MNT. Well, it's better to make that switch now than wait a couple of weeks and wait for your coin to just bleed to zero if it does, and then and then miss out on something that's actually showing relative strength. I'm not saying over rotate. I'm not saying FOMO into coins. I'm just saying use this as an opportunity to rebalance your portfolio if you don't have conviction, because during times like this, your conviction's really tested, and you don't want to be holding stuff you absolutely have no belief in, or it's going to be a very difficult few weeks for you. So I think a mixture of DCAing in a little bit today and consolidating is on my personal cards. I just think we have to be a little bit careful in case we do see, because as Fabian points out here, he was great updating people overnight in the Discord whilst I was asleep. This will definitely affect the belief, and it was already being tested in terms of time capitulation, but it will affect the belief in altcoins overall. I think it probably won't be a V-shaped recovery, because I think a lot of people got burnt. And, people have been seeing equities and stocks outperform for weeks. So to have this as the cherry on top of what's been a really difficult period for altcoin holders, I don't think bodes very well for the sentiment of the space. So I would be careful with big altcoin portfolios as well. And I would be moving down the risk curve in order from safe to risky. So I wouldn't be laddering into like low cap on-chain stuff. I'd focus on the majors, Bitcoin, ETH, Sol. Then you can move down to this kind of stuff. Then you can move down to this kind of stuff. And then, move down the risk curve, as opposed to aping a bunch of on-chain stuff, because that's likely what's going to be structurally affected most. Because if Bitcoin hits new highs, as I think it will, only the strongest altcoins are going to recover. So if you're in weak stuff that's not very aligned with the market narrative-wise, and it isn't very liquid, that stuff can underperform whilst Bitcoin hits new highs and things eventually recover, like I think they will. So yeah, I don't know if Paradise has anything you want to contribute to that, but that's how I'm strategizing the next period for my portfolio.
Yeah, for me, I got some stink bids filled overnight. So I got, it was actually you and I discussing it a long time ago. Remember this on the hype chart?
Yeah.
This weekly inefficiency down to this support level, and you look at the VRVP when it loads.
I actually had some hype limits filled as well, but I didn't fill in the 20s. I had limits in the 20s, but for some reason there wasn't liquidity on the exchange I was on.
Yeah, I didn't get filled in 20s. I got filled at 30. That's where I had the orders. But you see this massive volume inefficiency over here. So I've been waiting a good couple of months for this to fill. And I think a show we did ages ago, we're discussing this. So I've got to fill on that. If we start to bleed back down to that level, I'm going to cut it, because I just don't think it's a good look if we start to just retrace that whole thing. Also got a bit of a fill on useless and M&T. But what you were saying before about the whole rotation thing, I think a lot of people are scared to take a loss. And they're like, if I cut my losses now, what they do is they cut and they go immediately into USDT. And they're like, right, I lost 90% of my position. What you can actually do is rotate it. And you can just do simple stuff like pair charts for that. So I actually typed this out when you were talking. But this is MNT versus WIF.
That's what your noisy keyboard was doing.
Yeah, exactly. I got to get rid of this mechanical thing. I've got a new tactile one coming. But you can pull up simple pair charts, and like all you do with that is just go add symbol, and you can type in like, WIF USDT versus Pepe USDT. You can go for that, and then you can say, all right, what do I want to be in here? What's the stronger asset? Now, this is obviously a terrible example, but I did this MNT as well. So what you can actually do is you can rotate on a bounce out of your coin that's just taken a massive beating you don't have much conviction in. Let's say it's Pepe. And you can see by this pair chart, this is showing relative strength. This is MNT versus Pepe. So if this is going up, that means MNT is outperforming Pepe. And then if we hit the inverse, this is what the Pepe versus MNT chart looks like.
And you would never catch a knife on that. Like if you were trading that other chart on a USD pair, you would never be trading that. So like, why would you? Yeah, exactly. Yeah. Why would you be holding Pepe over Mantle right now? It looks exactly like this. It would make no sense.
So a pair chart's a very simple thing. All it does is an A and B, shows relative strength. So if this is outperforming and you can see, like we've had a big sell-off, but you can see MNT start pushing up again, you can rotate from Pepe, your bag that's down horrendously, into MNT. You can catch the upside in MNT, and then your 90% loss on Pepe effectively might become a 70 or a 60% loss because you've gained capital and upside by this going up versus the coin you're in. So it's not like a pair chart you trade. You don't go into an exchange and like try to trade MNT versus Pepe, but you just use it as a sort of gauge for risk on versus risk off. This is how I rebalance my portfolio all the time. I'm pretty sure Fabian does this too. You simply just go in, you type all your coins versus the other coins you're holding. You're like, right, do I really want to hold this? It's getting outperformed heavily by this other thing I hold, but I don't have as much exposure in. So this is all my rebalancing comes down to. And like pair charts, you all use a pair chart, BTC versus USD. Like if BC versus USD is going down, then you want to be in USD and vice versa. So I think a lot of people can get benefit from just playing sort of this thing with their portfolio rebalancing. But the TLDR is you don't have to take the hit and take that 90% loss and just go into stables and lick your wounds. You can actually make some of those losses back by going to something that is relatively stronger. But in terms of like stuff for me right now, in terms of building spot, I'm probably going to wait until the weekly close in BTC. I just want to see if it does indeed hold above that level. And then quite simply, all I do is what we want to see with this. I know we talked about like the weekly chart stuff, not going to low time frame, but what you can also do is you look for ranges to form in here. So I'm not going to use the absolute wick lows, but let's just say this low here to this high up here. Now this is effectively the range you want to play. The reason I'm not putting my range low at the low down here is because we don't expect it to get revisited, right? If price is to be bullish. So if we're looking for range plays on this, I just clicked Notion open. If we look for range plays on this,
if you hear me messaging now, I'm trying to set up. I'm trying to set up the thumbnail for this video so it can go out quick. Good,
man. So if you're wanting to play the stuff low time frame, you're looking for these ranges. So when I talk about that wick getting filled, potentially maybe we get some sort of run of the highs. We come down, we fail at the EQ, we come down and we test the range low. All you're looking for is just the standard ranging patterns to play here, standard price action patterns. So for me, that would be something like maybe we come down, we bleed, we fill some of that daily wick, we do a deviation, we get back inside, we retest the bottom. That's a long trigger for me there. I can at least play that rotation up into the range highs. So you're still making money intraday perps trading. But if we do indeed start pushing up on majors and altcoins follow, then you can effectively keep playing that above the range high. So I think for most people right now, we've had that massive sell-off. I guarantee you 90% of people didn't catch that Pico low on majority of things, but you now have something in your favor that you now have structure. So all you're looking for is just ranges to form, and you're just looking for the standard ranging schematic to play out that I teach like endlessly in the group and on my YouTube channel, which is just something like this. Maybe catches up, maybe the noodle gets reclaimed if I have the noodle on. The H1 right now we can see, the 15-minute is capping price. So price keeps finding resistance into the 15-minute noodle. And what that could look like for me is maybe price keeps rejecting the noodle comes down. And maybe we keep trading under it. Maybe we sweep the lows, come back up, we get above the noodle there. Maybe that could be your trigger because we're pro trend now. And then you just look to ride the trend up as long as it holds. So I don't think there's any reason to FOMO back into stuff right now. I think it's more time to see where you went wrong if you did. Have a plan, mark out key levels, set alerts, and simply wait until Monday if you want to be, fairly sort of risk off with, just jumping into things willy-nilly. Just see if we simply close above that 108K. And if we don't, just make sure we hold above 98K. So
and if you want to, I'm just plugging you quickly. If you want regular updates, Paradise has his own channel, Paradise Trades. It'll be in the description below because he'll be on just if you like this TA stuff, without me.
That's all I do. On there. Talk charts. Yep. Charts. So yeah, not much to go on. Like we covered the weekly bearish SFPs and how they always play out. We covered the weekly bullish SFPs. I guess the only thing that gives me a bit of concern right now is this, but I'm not reading into it too much. Let's just get rid of the...
what are you concerned about?
The L noodle? Well, not so concerned, but I need a better price chart. Here we go. It's this. So I don't think the cycle's topped here, and it's based on these indicators. So basically, we are forming this bearish divergence across the monthly, and we have been for some time. Now, if anyone marked out the bearish divergence between these 2 points here, we can see them on the oscillator down below. We can see if you sort of sold out there and said, right, that bearish divergence is locked in, I'm out of the market, price still had a significant move to the upside after that. So we are still forming a bearish divergence. So if we look at this, we're failing to make a high, but it's a bit different. It's not confirmed by the awesome oscillator. So the awesome oscillator, when these two things are in sync, that's generally a much higher hit rate reversal signal for me. We can actually see back in the 2021 cycle when it topped across these 2 points, we had that confirmation of a bearish divergence on the monthly across the RSI and also the awesome oscillator. So I'm not getting that quite yet, but it does give me sort of, concern to like pump the brakes a bit. So I think we're in the latter stages of the cycle. Pretty much the thing I do every year, like I did last Christmas in the group, is I de-risk most of my spot into the Christmas period. Historically, it's panned out quite well for me. So generally around November to December, I'm sort of risk off in the new year.
Last year would have helped you. Christmas last year was like the worst Christmas ever. I remember just getting absolutely hammered.
Yeah, and I went 80% to stables when we swept the range high and formed a deviation. That was pretty much the trigger for it. So, I am watching this. I do think we're in the latter stages. So I'm, my trading account's 20% and my spot / stables account's 80%. And I always make sure that's the way. So if I ever do get liquidated, which I won't, but if I do, for that whole account, I've still got 80% to play with. I think a lot of people park their entire net worth in their trading account. And on days like this, instead of holding spot, they're like, I'm gonna instead have 2x leverage longs running because I'm probably not going to get liquidated on that. And then we see the biggest liquidation event in history. And
just look at some of these price levels that alts went to. I was just looking before, like some of these were insane. XRP $1.25, Tau 120, Ondo 24 cents, Injective $2.70. Like some of them actually went to zero, like Wormhole 0.02.
Fuck, man,
it's insane. AVAX $8. Like it's absolutely insane. I want to talk macro for a second because you're showing quite a macro chart, and I think to end this video we should talk about like the cycle in general. Here's the thing. I don't think the top's in for equities, and this is like the most important thing. You kind of have to move down the risk curve. And if you could get the equities chart up, maybe it would help as well. I don't think the top's in for equities until we see the business cycle coming to a halt. And when I say business cycle, what I'm mainly referencing is the liquidity cycle. So typically there's, and Jordy had a great excerpt from this in his last podcast on Steady Lads, and Arthur Hayes also made similar points. Typically there's like a 6-month lag between rates hitting their floor and the economic data suggesting like an uptick in unemployment, inflation before you typically see a response. So what we are seeing now is rates keep coming down. We're expecting Q1 they hit a bottom. I don't think it'll be many months after that until the narrative shifts from loosening to tightening, because right now the word out of most central banks is is easing. It's lowering rates, it's liquidity provisions to bolster liquidity. That's still the narrative. And if you look at M2 and the Fed balance sheet, it's very clear on the charts that liquidity keeps being injected into the economy. So if you want to think about it really simply, bear markets are when liquidity is constrained, and bull markets are when liquidity is basically free in the market or being ejected into the market. So in my opinion, it would be unreasonable, and of course, tops can happen at any time, but it's the unreasonable assumption or the lower probability assumption that risk assets have topped. And this also goes for Bitcoin, gold, obviously alongside equities. And if that's the case, like if equities still have, let's say, 6 months of upside or potentially a tiny bit longer, then it would be unreasonable to expect Bitcoin to not make a new high. So I think from a macro perspective, any dip you see in the meantime, this being one of them, the tariff headline being another one, like any dip you see on equities, any dip you see on Bitcoin is probably a dip worth buying until the narrative shifts from loosening to tightening. And of course, there's like a little bit of a front running there, but we're still so many months off, in my opinion. So overall, I'm not trying to be the first one here to call a top when historically you don't see that until things actually start to tighten. And obviously central banks are in a very sticky position right now because they're trying to protect their economies whilst also experiencing crazy currency debasement and inflation. And Trump's been leaning into this. Obviously measures like tariffs kind of counter it a little bit, but who really knows the true extent of that, because the Supreme Court could rule against tariffs. I think that's the real bull argument for markets. If the Supreme Court rules that they aren't just, then markets respond very well to that. Where it starts to maybe get dicey and put maybe a pin in things is if they rule, no, it's okay. And, all this China stuff actually goes ahead. So there's macro stuff at play, but I guess the bottom line is I'm still expecting, and it's not just me, like the top macro analysts are still expecting upside balance of probabilities. And for me, that means any dip in the meantime. I'm a buyer of Bitcoin. So if we did get down to these levels that Paradise discussed of low, like around the 100K zone on Bitcoin, for me, that'd be a fantastic last leg of the cycle opportunity to go in. And you can have an inval of if we start to close below the noodle, or if we close below like 98, and you can have certain clauses like, a weekly close below, I cut 30%, X percentage drawdown, I cut another 30%, and then I'll just hold the rest. Whatever you need to do to protect yourself, I think that would be a great opportunity to position. And then that blow off top could be like 150K. So there can be a 50% or potentially higher. Like I know RTAs and stuff are calling for like 200-300K Bitcoin, but even at 150, that's like a 50% profit. That's pretty good on Bitcoin where you can go in with size. And then on many alts, that's going to be 200, 300, 400% if you pick the right alts with the right flows, which admittedly has been the challenge this cycle. But if you're able to do it, then I think this last bit of the cycle could still be quite fruitful for you. And that's why it's not, in my opinion, a time to log off and get too bearish. I actually think there's a lot of opportunity that's currently at hand right now. And it's going to be, I think, uncomfy for people holding too many stable coins in that last leg of the cycle. So, I've been not too much criticism, but people have questioned why I've been heavy in stables. That might change a little bit. If I get a decent entry, like quite a good risk reward entry on Bitcoin, then I'll probably go a bit heavier and try and ride out that last leg with Inval.
Yeah. For me, like I was, back in 2023 when we started flipping the weekly noodle, I was, I think, 10% in stables, and I had most of my money in Pepe and C-Pool. On this bounce when Trump got in, I think I had about 30% stables left, de-risked to the December 2024. And now I'm sitting at about 60% stables. I just think as we get further into the cycle, it's not an excuse to pour more money in. You actually want to like have less money in. That's for me anyway. I'm fairly sort of risk averse a lot of the time. Not so much in intraday trading, but in terms of like my portfolio, I'm not throwing money at the wall and like ramming it all in for this last little squeeze up to 150, whatever, because that's basically where I think we run to as well, give or take 140, 150. And like seasonality for me, like I said, every Christmas has kind of worked for me over the past couple of years to de-risk into. So, it's not somewhere I want to be really pouring it all in right now. And I actually do have in my separate account, which is like the 80% portfolio, I did consider maybe putting more stables into the market over the last couple of weeks. But I kind of have a golden rule not to ever do that. But I did start to sort of question myself. Maybe I could squeeze some extra upside if I just put more in. But I'm kind of glad I didn't go through with that decision. But yeah, I'm not looking at anything really other than I'm just, a simple man. As long as we hold this demand, as long as we hold the weekly noodle and close above it, continue to trade above it, this is just another SFP of the lows. As we've seen historically, as prices told us in the past, if price is fractal, that has generally, after a bit of chop, has led us up to new highs. Now, if we actually look at those SFPs again, where we swept the lows, we didn't move up straight away. We did have some nice moves, but over the weeks, let's just do this one here. So, this SFP to here before we marked up, that was 70 days of chop and ranging. And this on the weekly chart. So pretty much when we marked this bottom, SFP the lows, that was 42 days. So there's nothing to say that we can't have like a month or a few weeks of chop here. So kind of what Miles said at the beginning of the stream, I don't think we'd be reverse out either. I think now we've swept those lows, there is a potential that maybe we just chop for a bit. Could be 45 days, could be 60. Maybe we sweep that low again. But as long as we hold these 2 points, I'm all good at staying in the market. So the noodle's a very simple barometer for, obviously it's a trending indicator, but like very simple barometer for in line with market structure, whether you want to stay in a trend or not. And quite simply, as soon as you start losing that trend, I'm out and probably looking for swing shorts.
The trend is your friend until the end of the trend, I suppose.
Yeah, pretty much. But yeah, if anyone wants to access this and get it in the Miles High Club, I'm sure the link is in the description of Miles' video. You also get access to this, which is been really good. This is a new indicator we created, which is basically an index spaghetti chart. So you can see right now on the weekly, everything's underperforming BTC. This is why you don't really want to be in alts right now. We can see even if you're just intraday trading right now, RWA has had a pretty strong move off the lows and is, as an outlier today, outperforming. So if you were trading today, obviously RSR is leading that charge for some reason. Maybe there's news behind it, not sure. But, it's a very good tool for trading intraday and also intra-week. You can also just change your timeframes to whatever you want to do, positions over years and stuff. You can change all those options. But other than that, I think we're hitting around 50 minutes now. Yeah, bang on, 40, 49.
Yeah. I will say this as a final comment. Like, look, I know there were some members in the group who lost money. Like, there's always some people. But overall, I think we did a good job. The analysts, you obviously yourself, Morin, Surf, Doc, Fabian, like everyone has been pretty like conservative over the past few weeks, and especially heading into this, I think we've been yeah, I don't know what I'm trying to say. I think we've done our best to protect people. Obviously, some of the trades have gone wrong, but I've seen other groups. Like I woke up this morning, checked some other groups. It's absolute anarchy because like there's all these trading signals with buy here, stop loss, and everyone got wicked out. That's not really how we operate. We're a lot more selective with our trades and obviously update people throughout the entire course of it, especially the traders in the group like you and Morin. So I don't know. I feel some solace in the fact that we're able to protect people and be there for them during a pretty difficult time. Even though I know balance of probabilities, most people lost money. There are a few outliers of people that absolutely printed, like because they were on their computer and were able to snipe the lows, and those people absolutely printed. But I think the game was here just not losing as much, trying to minimize your losses was the game, and I think we help people do it, but obviously unavoidable to minimize all losses because any spot position is down, right?
Some people got hit, but I think the golden thing is Morin, Surf, myself, Doc as well, just been fairly risk off in terms of swings. So basically, I've just been posting intraday trades here and there that have been half risk, so 0.5% of my trading account. So taking hits on that doesn't really matter. I wasn't long anything last night in leverage, but hasn't been any trigger since we sort of started closing under BTC's all-time high to give us that signal. And like I think VWAP's been a phenomenal marker for this, which I've been using a lot. So this is the monthly VWAP. You can see we've been trending up it since the monthly open, the quarterly open. Each retest of value high has been very bullish. Something I was saying is we start closing back inside here. We look for a bounce down the VWAP. We got that, and this was pretty much the signal to go risk off here for me. We came to the value area high, started rejecting. I think last night this bar I drew, a couple of days ago, all we were looking for was that sort of, I was saying you need to flip this level here in line with the monthly VWAP and get above it to see a rotation back into the highs and hopefully into fresh highs. And that was the sort of risk on signal in terms of more intraday trading, not so much, spot. In terms of like bigger swing positions, it's more going to be like a BTC really starts breaking out with some volume above all-time high, BTC dominance-led rally, and obviously alts take a bit of a hit. Eventually, we see maybe BTC dominance come up into 60%, which is a level I've been discussing a fair bit on my channel. If I can find it anywhere up here. Sorry, one sec. Yeah, so actually did get up there obviously because of the puke, but I was looking for us to basically come up here and reject off this level on a rally, and that would have led to alts basically having that sort of rally to follow up and catch up. Obviously, I can't really use this now based on last night's liquidation, but yeah, so I think fairly good signals given so far in terms of that, just for de-risking or just not being so risk on more so. So I think that's why a lot of people didn't get carried out. A few did, obviously, because you can't control what people do with their leverage and their time. But yeah, been pretty decent so far. I was expecting a lot more people to be hurting today, but the group's actually still pretty positive vibes. Everyone's just chatting between themselves and trying to figure out the next move.
Yeah, well, we'll keep people updated. I'll probably do a show tomorrow, and I know you're doing your update on Monday, and we got more AMAs in the Discord. I think we've got a few sessions over the next few days. Let me just check. We've got tomorrow 6 p.m. Morin's on, then you're on, then Fabian's on, then I'm on. So lots of mentorships. I think that's the best part about what we're doing. I think it's very hands-on compared to other groups. Like I try and answer all my questions. Obviously today it's crazy. I'm just catching up on them, but I try and answer all questions. I know you do as well. I know all the analysts do. So I think that's testament to the work everyone's putting in. But anyway, we'll wrap it up here. I've got lots to do. I've got to rebalance on my portfolio and just focus on. One little thing I'm doing, and the tip for you guys is like, just make sure you're not holding too much on centralized exchanges. Like I highly doubt they go down, but I do think you want to move some stuff into self-custody, because sometimes what happens is a few days later, there'll be like rumors or something. Like there's already rumors about certain exchanges right now. I don't want them to sue me, so I'm not going to say who they are, but probably wise to just where there's smoke, there's fire, and just do the plus EV thing and move some money around and make sure you're safe. So I'm going to spend a few hours doing that. Got a bit of personal stuff to do, and then probably go play tennis or something, get away from the screen. That's probably the best thing to do today. Do what you need to do, and then enjoy your Saturday, and we'll pick it up from there.
Yeah, come back for the weekly open. I'll stream on Monday as well, because that's going to be important just for those things I've been discussing. So give yourself a break, and yeah, weekly open should be fairly indicative of what's up next.
100%. All right, cool. See you guys later. Peace.
Cheers.